Welcome to gold analysis for the first week of March. We'll quickly go over what happened on gold. We were expecting bearish structure to hold because, as you can see, this rejection from 1764 monthly level wasn't as large, and price was still maintaining the bearish price action that we saw hold throughout the week, right? And then later on in the week, we got a move. We got a new lower low created. So what happened was this low from November 30th, 2020, price broke it. We got a nice break of structure on the 4-hour candle, and then it set up during London and New York, and then it got the move down, right? And here you can see that this was the London Open 1-hour candle pushed up. Where did it push up to? This FTR level right here, right? So it pushed up to that area, rejected, 4 a.m., pushed down. We're still consolidating, right? We're consolidating, but we're consolidating towards the downside, right? So plus, and it's because we broke the structure, right? And so we knew that if we remained below, if gold remained below this level, then it was likely going to create a new low. So this right here is New York Open, 30 minutes into New York Open. You can see we're still retesting, but we had this lower high, lower low. Now this is the next lower high happening in New York Open, and then it pushed all the way down, right? Create a new lower low, dropped 400 plus pips. So now we start to think, okay, what can we possibly see? We know gold is bearish. Looking at it monthly, hella bearish, right? Fucking bearish. But start of a new month, and what do we know happens at the start of each month? Liquidity wick in the opposite direction to actually set up for the rest of the move, right? Set up for the move for the rest of the month. In this case, if you look at February, we dropped start of February, but then price also pulled back logically because we just created a new lower low, and then we need to create a lower high, but also it pushed back above where the monthly opened. So this was just a liquidity wick to grab premium sell price, right? And then rest of the month, we saw two very nice bearish moves. So now you're thinking, okay, we have this break of structure, right? And I drew a 4-hour daily demand at this level. Right? It's at 1680, like, okay, it's pretty big from 1660 to 1687. So you know that, okay, if bearish price action continues, then we're going to continue down to here because this is the next logical higher time frame demand area that price can come down to, right? And who knows, maybe we'll see premium buys from here and then start shifting and push up. But we pay attention to what's happening in front of us right now, and then we'll analyze that scenario when we get to that level, or if we get to that level. So now that we decided that our bias is bearish, we can start looking for possible areas of entries, right? Where price may do a pullback before continuing down to our target here at 16 high 1600 area, right? 1686, let's say that. So there's a couple levels where it could pull up to. You can pull up to here. This is because why? This is the previous broken market structure. And this is super clear, but look on daily. It's right bottom right there. We broke it, right? What would be nice? A daily retest of it, right? Or we still have levels to the left here. Specifically, we have 1749.5, or I'm just going to, one second. I'm just going to change it to 1750. 1750, and you can see over here, if we go to it, where is it? Right here. Yep, price rejected it. Couldn't close above, below here. Sorry, couldn't close above for days. Came back, rejected it. Once it did break above right here, a retest. Several days retesting this exact level to the dot, right? So it is a very valid historical price level that we need to be watching for. Dropping down into lower time frames. Logically speaking, we're going to need to create a lower high, such as after every move, there's been a lower high, right? And the retracement for that from here, 1763 to 1815, that's 600 pips retracement before dropping 1,000 pips, right? So a retracement like that is nothing to be scared about. It's perfectly healthy. And the higher the retracement, the better the sell price, right? Unless structure shifts. But currently looking at gold right now, we don't see any sign of that besides bearish. So one possibility is, I'm just gonna remove this one first. One possibility is that gold retraces back up here, okay, which would be like a 300, 400 pip retrace, right? And then we see price action consolidate, create that lower high here, and then it pushes down, right? Where would we push down to first? Well, first we got our low here, right? Which is valid market structure as well. So push down to here first, and then if that breaks, then we can push lower into 1686. Okay. If that scenario doesn't happen, oh, also to touch back on what I was saying, let's say we create that lower high here. Don't be surprised if price doesn't push down immediately. Look what happens, how long these lower highs take to form. These are a couple days of price action. February 22nd to February 25th, 3 days. February 8th to February 11th before we did the move, 3 days, right? So don't be surprised that, okay, maybe if gold pulls here, then price pushes, consolidates for a couple, like a few 4-hour candles, a day or two, and then pushes down. So that could happen, right? Or our other possible area of pullback is a 1750, 1749.5, 1748 level that we just drew, just 20 pip level, right? So it's also possible that gold, because it is a valid level right here, right? As you can see, if we go into like 4-hour structure here, wow, rejection here, rejection. Oh, we broke it, retested exactly before pushing up, right? So now here, we have the 1750 level. It's also possible that we pull up to here, and because bearish momentum is so strong currently, maybe it will just start going down start of the week. Who knows, right? But we could be looking, because you don't want to be selling at a low. That's fucking illogical, knowing that gold pulls back so much. So these are the two scenarios that I would be watching for. But yeah, this is a target 1860, 66, 67. There are other 4-hour levels in between, right? Like definitely like 1700 would be a key one right here. As you can see, 1700, see some price activity around here. But essentially, price does come down to 1680 since these are high liquid areas, right? There's it's a nice area for orders to enter in the market, right? So don't be surprised if we see like a 500 pip retracement, 400 pip retracement. It's perfectly healthy. Doesn't mean that bear structure is now shifted, right? And looking on daily is moving in this bearish structure, right? You see this bearish like wedge that's being created, or whatever you want to fucking call it. It's a channel, right? Even over here, this bearish channel that we're currently playing in, right? It's super clean. Like price is just reacting to it. Bottom buy still there, and then also monthly level. So now this also lines up to create a new lower low. Possibly we're going to come back here, but maybe we'll retrace a bit and then work our way down, right? Which would be perfect. Tap this level before possibly showing a different shift in structure. So that's what I'll be watching for. Essentially, this is my target. I am bearish on gold. If something does shift, your market structure shifts drastically, I will update the analysis. You can watch some of the daily recaps or just in the Telegram group. Links are in the description. But yeah, that's gold, super clean. Let's watch it. Moves usually set up pre-New York. There are sometimes entries during London, but it's best to just get the ones at New York because it's more likely to happen there. All right, and take care.